All right, welcome back. Ed Ponsi here, your FX educator here on behalf of FX Street. Once again, we're going to start off our second segment of the day. We're going to talk a little bit about yesterday's Fed meeting, and because the dollar did fall sharply on this, and some people are referring to it as a dovish rate hike. Everybody anticipated that we were going to get a rate hike, and we did. 25 basis point rate hike from the Fed, exactly as anticipated. But as I look at the Fed fund futures, what do the Fed fund futures predict going forward? Here we are, it's currently March 2017. What you do is you take 100 and you subtract the contract price, and that gives you a number. So 100 minus 99.21 gives you 0.79. Well, the current rate is 0.75. That's very close to 0.79, correct? So that's in the ballpark. That's very close to what we have currently. And by June, a lot of people believe that we're going to see another hike by June. How do we get that? Well, 100 minus 99.03 gives you 0.97. 0.97 is very close to 1%. The next time the Fed raises interest rates, we will be at 1%. According to what we're looking at right now, that there's a good chance that happens in June. There's a good chance that happens by June, and that it would definitely happen by July. Right? So that's what the market's telling us right now, that you're going to see. We've already seen one rate increase this year. We'll see another one this summer, and a third one by December. You take 100 minus 98.74, that gives you what? 1.26. 1.26 is very close to 1.25. And 1.25 would mean another 25 basis point rate increase. So right now you're at 0.75. You raise again, you get 1%. You raise two times, you get 1.25. And the market's telling us you're going to get another rate hike by summer and a second one by the end of the year. That's what the market believes right now, based on what occurred yesterday. So 3 rate hikes for 2017. So I guess anyone who thought we might get 4 would be disappointed, and perhaps selling dollars yesterday. We saw a big slip in the dollar yesterday. I'll show you that chart one last time. So dollar went down. So dollar went down. I'll go make it daily. There you see it on the 4-hour. Look at that. The dollar just got hammered on the 4-hour. Here you're going to see it next. On the daily. And of course, the S&P 500 likes that news, because they're saying, well, at least we're not going to get 4 rate hikes. We're only going to get 3. Big green candle. We're not at all-time highs, but we're getting close. Getting close, right? Speaking of stocks, just a few. Some of you are probably familiar with cup and handle pattern. Sometimes I just scout through charts and look for cup and handle, because cup with handle can be a very powerful chart pattern. So just want to share with you a few of those that I've looked, scanning through the charts. Walmart, Big cup. Handle's about 2/3 of the way complete. One of the good things about stocks is that we can look at volume. So I'll add the volume to this. The breakout would have to occur on high volume. I'm giving you these before they break out. Nike, the sneaker company, big cup and handle, about 3/4 complete. How about HSIC, Henry Schein, which actually makes equipment for dentists. Very nice, big cup and handle here. And I'll give you one more, Alibaba, BABA. This one's ugly. I don't know about this one. This is that handle's too long. Maybe just forget about this one. Forget I showed you Alibaba. That's a really ugly handle. But anyway, Walmart, Nike, and Henry Schein looking good. Baba, I don't know about Baba. Baba you might be able to pass this one as a inverted head and shoulders continuation pattern. That's a stretch, though. It's a stretch. Anyway, let's get back to our world of currencies and also commodities. Look, since we're making the rounds here, we should look at commodities also because gold really liked yesterday's news. Gold had a rough week leading up to this Fed meeting, but look at that. Look at the way it shot on this news. Dollar weakness turned out to be very good for gold yesterday. We saw that it collapsed out of this pattern, but it really rebounded very robustly yesterday. Silver, very similar chart pattern here to gold. Can I have natural gas? Natural gas is just extremely disappointing. This is more of a supply issue than anything else. The U.S. is just swimming in this stuff. Oil, just again, a supply issue. There's just so much of it out there. If you're not aware of it too, there was a huge find in Alaska within the last few weeks. You found a huge oil field in Alaska that's going to contribute, starting in a couple of years, it should contribute over 100,000 barrels a day. The U.S., of course, not part of OPEC and under no agreements to cut production. And the only thing that cuts production in the U.S. is price. If the price is too low, then certain companies simply won't drill. You know, they won't search for new oil because it's just not worth it. But if the price begins to rise, then they'll start bringing that new oil out of the ground, and this will tend to depress prices. So really, you know, OPEC and Russia don't have, because the U.S. has increased production so much over the past 10 years. OPEC doesn't have as much control as it used to, and this is what we're seeing today. That, you know, OPEC production cuts used to determine the market, and it no longer is the case because of advances in technology. Advances in technology have allowed producers in places like the U.S., Mexico, Canada, and other countries to really increase production, and that has diminished the importance of the OPEC cartel. And this is one of the reasons why OPEC cuts have really failed they haven't completely failed. They certainly were able to get the price out of the 30s, But you'll notice that they have failed to push it up to 60. And we've been locked between the mid 40s and the high 50s now for basically for a year on oil. And this is quite a drop here, just quite a plunge. So anyway, oil prices look like we're just going to stay locked. Because if you do get a big increase in the price of oil, it's just going to cause more producers in the U.S. to dig and to extract more oil, and that's going to put more oil on the market and push the price back down. So it's an interesting dynamic. Okay, let's get back to the world of currencies, shall we? All right, so an interesting excursion. Oh, got to give you one more too. Tesla has been very good lately. But it's an interesting stock. It could be forming a very big head and shoulders here. I'm not in this stock right now. When this rally began, I covered. I was short for a while because of this pattern, and then Elon Musk got on Trump's team. He became advisor to President Trump, and that's when I said, forget it. I'm not shorting it. If Musk is an advisor to Trump, I'm not shorting it. And besides, the market's in it's in a wild bull market right now. So I'm not shorting it. But anyway, it's had a tremendous rally. But look at this, left head, right. I'm not shorting it because it's too much of a bull market. You just don't look for shorts in a bull market. But Tesla could be forming a head and shoulders here. It is kind of it's bid up this morning. It's going to open higher this morning. But it is an interesting stock. It's a fascinating stock to watch. But at this point, I'd rather watch it from the sidelines as opposed to being an interested party in terms of being a shareholder, either long or short. It's just too crazy of a stock to own right now. Okay, let's get to some currency pairs that we haven't looked at recently. First of all, the euro is out of the danger zone as far as I'm concerned. The euro cleared the bar yesterday with the elections. First of all, with the elections in the Netherlands, clean bill of health, right? There was an anti-euro candidate. That candidate did not win. And the euro got through the Fed meeting pretty nicely. So 108, we said earlier, is going to be the key against the dollar. If it can break through 108, it could really run very far. Look at this area here. Try to change that to yellow. Like this area of 108, if you get through 108, this chart is starting to remind me a lot of the Aussie New Zealand chart that Carlos has really cashed in on, one of our regulars here in the room. Now you're making a run, and this has been rejected numerous times at 108, but if it can get through, you could see this all the way at 111, 112. It could really run. And this could be a real sleeper pick, going forward, because to me this means the euro's out of the woods now, right? The election and the Fed were the two big, beware the Ides of March, right? Is what they say, and the euro made it through without so much as a paper cut, to me that means smooth sailing ahead. For the euro. And so it just has to get through 108 and then it's goners. So I'm thinking it might be a buy here with just a small position and then add to it if it breaks through 108. That's not a recommendation, of course. It's just something that I'm thinking of doing. And I don't really talk about what I do or what I've done because I don't want people following me or assuming that these are recommendations, because they're not. This is just, these are just my thoughts. But this is something that I've got on my mind, because if you break through here, look how far you could go. Look how, and this is the key, look how quickly we drop here. This is the U.S. presidential election, by the way. The euro shoots up to about almost to 113, and then it's a straight line to 105. And when the prices move in a straight line, they don't have time to create support, resistance, anything of that nature. When there's no support, when there's no resistance, prices can move through very quickly. And that's a good thing, right? That's a very attractive, that creates a very attractive situation for traders, because the prices, it's like the express lane, right? It's like the express lane when you're at the supermarket. It's like the HOV lane, right? When you're on the highway, it's that lane that's bypassing all the traffic. And this is to me a very special situation potentially. Okay. Anyway, so that's the situation with the euro. That's where we stand. All right, but that's against the dollar, but what against other currencies, right? We already talked about euro pound, and we already did the setup with euro pound. Now, if you missed that, my recommendation would be to go back to the prior session, go back to the archives, and check the archives for FX Street. Go back to the earlier session. Come on, TradeStation. There it is. We did our trade setup earlier for the euro pound. This had a very fast run up, and it could be getting ready to break the other way. Now, in this case, right, for euro USD, you would be long the euro against the dollar. On this trade, you would be short the euro and long the pound. So yeah, you could take both setups potentially, and you would not be in conflict. That's pretty cool. It's kind of nice to be able to do both setups and without being in conflict. Okay, let's continue on with this theme, because we spoke recently about Euro Swiss. And we spoke about a setup up here with Euro Swiss. And you know, man, it's a little bit frustrating, because I wanted to do a short up here, thinking if the price got up here and then it would tumble. Well, it's been tumbling and tumbling, but it never quite got up to our entry point. Very unfortunately for us, right? And otherwise, it's been unfolding exactly as we expected it to, but it never triggered. So, unfortunately, yeah, that's one that we just missed the boat. But you know, that's going to happen. You can't catch every trade, and you you just keep putting in the setups and seeing what happens. But yeah, this is dropping below 107 now. Already past the first target, heading toward the second target, and looks like it came. How close? Looks like it came within 25 pips or so of hitting the entry point, but did not hit the entry point. So, unfortunately for us, we'll probably just have to call this a scratch. If it were to come up now, I don't think I'd take it, because the situation's different now. My feeling was that the Swiss franc becomes a safety currency going into all these risk events. Well, the risk events are now past. So it was a nice setup technically. It made sense fundamentally at the time. But the time was prior to the risk events of the FOMC meeting prior to the risk events of the Netherlands election. Those events are now past. So, no, right? This is no longer valid. No longer a valid setup. Euro yen, let's take a peek. This appeared to be breaking down earlier, and now it's back up into this sort of sideways zone. I don't really see an edge here any longer. I was favoring short as this was breaking down. Now I have no edge directionally one way or the other on euro yen at this time, so I'm just going to let this go at this point. I'm just going to bypass this at this point. Euro Aussie. This would have been a nice entry. Rallied up to resistance here. You see we have a downtrend, right? The general trend is lower. Rallied up to this area of resistance right here. Came right into that and dropped. Okay, too late to catch it now. Unless it comes back up. If it comes back up into that area, that could still be a good short. That area is approximately 141.50. I'd keep an eye on that one still. Aussie is not. I wouldn't really classify it as a weak currency. New Zealand has been weak. We certainly know that Aussie has been stronger than New Zealand. How about Euro New Zealand? Now this is interesting. This looks like it actually might be a short currently. It's actually a fair amount, a little bit of resistance, not a lot, but a little bit of resistance right where it is. A tremendous run. Euro's been crushing New Zealand lately. Does it continue to crush? I don't know. Let me show you New Zealand USD. Remember we drew this area of support in? It rocketed out of that area of support yesterday. Rocketed out of it on that FOMC meeting. Now, the only problem with playing it there is that you would have had to have played it during an FOMC meeting, which is really very risky. You're risking a lot of slippage. You're really taking a lot of risk if you're playing it through the FOMC. But it did shoot above 70, which there was a lot of resistance around 70. That's why we had a line there. Shot through that line, right? But it did. This area did hold, and it shot up on the dollar weakness. It looks like it kissed 70.50. And since then, it's been receding. Even though the dollar hasn't been really that strong, New Zealand has been tremendously weak. And I think I would say, this is a short on rallies because I think it comes back down to 69 again. If it like a rally, not necessarily back up to 70.50, but on a shorter time frame, let's say a 60-minute. And I'm going to put RSI up here on the 60-minute. This is going to get way overbought. This is going to get very overbought here. Watch this. It even looks like a overbought head and shoulders on RSI, right? So it's giving you sell signals up here. RSI gives you several sell signals up here. And what I would be looking for is additional sell signals up here. So like another rally above 70 probably shortable. New Zealand is just weak. Now, as far as Euro NZD is concerned on the 60, I don't want to sell euros. I want to buy euros. This is a lot tougher to do with this method. This was a great buy signal to buy euros against New Zealand just last night, but it's a lot tougher. It's a little bit tougher on this one. That was a great buy. But this has already run up a lot. Now, this is a little bit tougher. I mean, psychologically, it's a lot tougher to say this has already run up so much on the daily. How can I be a buyer when it's already run up so much? But what a perfect buy that was. That's your dip on the hourly. That's your perfect RSI dip on the hourly right there. You can't see it on the daily. You switch back to the hourly, 60-minute. That's going to be your RSI dip right there. That's it. Unfortunately, there were some false signals ahead of that. You would have had to suffer through those to get the perfect buy. But it would be worth it because you're crushing it on that buy. You would have had to take a few losses, but your buy would have made up for the losses and then some. Okay, by the way, we had some economic data come out, so just catch you up on that really quick. We had a lot of stuff that hit. Housing starts in the U.S. up 3%, but building permits down 6.2. Man, that's weird. See housing starts up, but permits down. Permits is usually more forward-looking. Jobless claims, 241,000. It's right in line with estimates. Philly Fed, a little bit better than expected. That's a manufacturing survey. It's just like the Empire Manufacturing Index. That's it. That's all the data for today. Tomorrow's Friday. I won't be with you. Doesn't look like anything really major is hitting tomorrow. So nothing really major to worry you or concern you. Nothing you should be really concerned about as far as getting out of your trades tomorrow or anything that should be a major disruption. Of course, there's always the potential. There are always things that are never going to be on your calendar that could happen, right? So you always got to be mentally prepared for stuff. All right, gang, that's going to do it for me for now. This is Ed Ponsi. Always a pleasure, folks. Always my pleasure to be here with you. Your FX educator here on FX Street. I'll see you next week, okay? Everybody have a wonderful day. I'll talk to you very soon. Take care.